Today's early trading capping several weeks of drama. The Fed sticking with a rate rise despite instability in the banks. Here with more is Yahoo Finance's Ines Ferre. Hey, Ines.
Hey, Rochelle. Yeah, and just taking a look at our Wi-Fi Interactive, it all says it right here. You're looking at bank stocks right now that are lower. As you had mentioned, Deutsche Bank down more than 6%. Concerns over the credit default swap prices that have really skyrocketed. That's insurance in case of a default. And so that is causing this stock to be lower. Also, the banking stocks in general. I mean, I'm just going to pull up a 5-day chart so you can see over here on the 5-day chart. These are the big banks. The regional banks, over the last 5 days, we're looking at a mixed picture there. But if I pull up a sector action over the last 5 days, you can see financials underperforming, utilities there as well underperforming. So the big risks have been, of course, with the banking sector, with the worries that we've had there as far as banks having to stem outflows of funds. You've had First Republic that has been very volatile as far as that stock is concerned over the last week. Also, I want to mention that we got some data from B of A about total credit and debit card spending. That's been slowing on a year-over-year basis since the start of 2023. Now, this doesn't bode well for the economy, which is very consumer-driven, and it doesn't bode well for equities as well. I do want to point out what's been happening with energy stocks as well. This week, we are seeing energy stocks lower. You're looking at energy down more than 1.5%. Last week, also, you saw a drawdown when it comes to energy stocks. And remember that this was supposed to be the sector that this year was going to also perform well, perhaps not as well as last year when you saw XLE up 57% for the year, but still supposed to bode well. We'll see how the rest of the year fares out. But of course, concerns of a recession is also putting an impact on oil prices, on energy stocks. In fact, XLE right now is on pace to have its biggest decline for the quarter since 2020. So it all says it right there. Also, oil, the underlying commodity, on pace for its biggest quarterly decline since the first quarter of 2020. That's when demand was totally wiped out because of the pandemic. So those are some of the risks that we're seeing in the markets right now. I do want to note, there was a note from Wells Fargo analysts saying that stocks all week, they sort of yo-yoed, and portfolio managers have preferred to go into the tech sector for safety during times of uncertainty. Rochelle.
Certainly lots for investors to take on at the moment. Thank you for breaking that down for us, Ines.